see there's lots more pressure on the markets. Eurozone once again in the spotlight, concerns about the fact that that injection isn't going to help the market much, or even those Eurozone nations. What do you make of this?
I mean, you could go and look at the more in-depth kind of idea, but also you could look at the fact that basically they're doing one positive, one negative day for the last week or so. So each day it seems to change. One day they think it's positive, one day they think it's negative. Yesterday we had the Greeks back on the streets. Yes, there were some indications that there were going to be some austerity measures coming through from Portugal, etc. But the market seems to vacillate between the positive and negative sentiment depending on the day it is, basically.
Okay, so now Portugal, following on the footsteps of Spain, market shrugging off those news. However, spending cuts will lead to lower economic growth going forward.
Oh yes, most certainly. I mean, even though each individual country in Europe is quite small, if you compare them, for instance, versus the US versus Japan, but if you combine them together and think of them as a single country, you find that they are actually the largest economy in the world, the Europeans. And therefore, if you're having the Greeks, the Spanish, the Italians as well, the Portuguese all cutting down on consumption, you're having the Germans and the French having to pay for it, you are going to have a situation where demand is going to be lower in that particular part of the world, and of course demand in the biggest country in the world, or the biggest economy in the world being lower, it's going to affect the entire globe. What's
interesting at this stage in the US, more banks are being investigated, and it seems like Goldman Sachs has opened the taps there.
Yes, I mean, the argument Goldman Sachs have been putting out was that we weren't the only one doing this. I mean, whenever they were questioned or whatever, it always came back to the fact that this was just normal practice for the way things were being done in Wall Street. And obviously, one had to obviously conclude that if they were going to invest, Goldman Sachs being the most well-known name, and if they found that Goldman Sachs was just doing what everyone else was doing, they have to invest everyone else as well. And so that's what they're going to do. They're going to investigate all the other major players in the market, as well as, more importantly, the ratings agencies. And there's actually being some moves yesterday in Congress to actually make some new legislation against these rating agencies to prevent something called the conflict of interest that they have. Because what happens to the rating agency is that the agency is paid by the person that they rate, and the better the rating they give, the more they get paid. There's obviously a conflict of interest in something like that.
Well, the ratings agencies were part of the global economic crisis we saw last year.
Oh yes, most certainly. I mean, if you were rating something called a ninja loan, which is no income, no job, no assets, as being a valid loan or a non-junk bond loan, you would obviously have to have some questions asked about what your methods are and how exactly were you going to rate something like this.
All right, Tencent in China out with results yesterday, revenue up, helping to boost Naspers here in South Africa. That share managed to close at the top of the top 40, about 3%.
Yes, we were expecting these good numbers out of Tencent for quite some time. I mean, Baidu's numbers came in a few weeks ago and they were very good as well. I think the Chinese economy is doing better than any other economy in the world at the moment. I mean, they're going at like 11-12% almost growth rates, and the rest of the world is barely managing to stay positive. So the Chinese are doing very well. Then also they have a very strong online culture in China. They have a lot of people online. They have a lot of revenue coming from that. And Tencent, with its gaming business, its online gaming business in China, it's in a growing basically sector in a growing economy as well. So it's obviously doing quite well. And obviously it also augurs quite well for the future as well.
There's also a concern of China overheating. Are you also of that opinion?
Yes, I mean there are. When you have a 12% growth rate, 11% growth rate, even the Chinese only want 8%. So you're still talking about a massive amount of growth. And in a country such as China, where you have such a huge growth rate, there obviously are going to be some inefficiencies in the market, some bubbles being created. And there are talks about bubbles in the property sector, especially in China. And what people don't realize is that to a large extent, the government in China is funded by property development. And there are often riots happening where the governments in the hinterland provinces go off and confiscate land and sell it to developers, etc., etc. So there are major problems in their property sector. And obviously the government has to look at it strongly, because you can't rely on that forever, because there's a limited amount of property in the world, or especially in China.
Okay. If we go back to the US, the initial jobless claims dipped to 444,000 last week, but from a revised 448 the previous week. It's still not enough growth happening on the jobs front.
Yes, I mean, you're looking at the economy is basically standing still in terms of job creation. There has been some hiring coming through, and one must consider the fact that the US has a growing population as well. So unlike places in Europe where we can have, just a stabilization in the amount of jobs being created, the US has to create more jobs just to keep stable. It's kind of like South Africa. We have to create more jobs just to keep stable. So there is some kind of hiring happening here for the rate to even drop a little. However, it's not enough to actually alleviate the kind of unemployment rates that they're seeing. Historically, the US likes to have a 6 to 5% unemployment rate. Now it's closer to 10%, and obviously that's quite negative for both the US population and US politicians as well.
SARB left interest rates unchanged as expected, but Jill Marcus did speak about contagion in the Eurozone and how it could affect South Africa going forward.
Oh yes, I mean, as I mentioned, the Eurozone is effectively the largest economy in the world. If you consider it to be the United States of Europe, it's bigger than the United States of America. So one has to consider the fact that it's also our largest trading partner. We have a lot of historical links to the Europeans. Much of Africa has historical links to the Europeans as well. So not just us, but the whole of Africa is going to be affected by, any kind of downturn in the European Union. And as I mentioned, you can't imagine a Greek out there or a Portuguese citizen or a Spanish citizen looking to buy a new car, looking to buy a new house as easily as he was willing to do that maybe even 2 years ago or even a year ago. I mean, they are going to consider the fact that they are going to be looking at a long-term, multi-year downturn or slowdown in the economy, and it's also going to affect the UK economy as well once they get the government in order, and once we have a situation where the Greeks and the Spanish and the UK and the Italians as well are all slowing down, it's probably going to affect the Germans and the French as well. So we have to consider the fact that our largest trading partner, the world's largest economy, is going to go through several years of difficulties, and it's obviously going to have an impact on us.
Corporate news, Standard Chartered going after Nedbank, still a bit of a rumour, Do you think there's something brewing there?
Look, there are obviously synergies available. So at the moment, there are basically two banks that are unpartnered at the moment. We have the ABSA partnered with Barclays, and we have Standard Bank partners with the Chinese. So there's obviously growth in Africa available, and we're one of the few places in the world where there is going to be growth or strong growth over the next few years. And there are obviously people who want to come into this growth market and exploit that. So there is definitely synergies available for Standard Chartered to come in and look at Nedbank, for instance. Whether this is going to go through, I don't know. There was a statement that from Old Mutual that they see Nedbank as being one of their core earnings drivers for the next few years, and therefore that would seem to indicate that they would not be looking to sell it. But of course, if the money is good enough, who knows?